Hello and welcome. My name's Chris Can with Mining Journal, and I've got Emmerson CEO Hayden Locke on the line with me. Emmerson is, of course, developing its Khemisset Potash Project in Morocco, which recently released the feasibility results outlining a 1.4 billion MPV and other outstanding economics, along with an incredible cost profile. Welcome, Hayden. Thanks for joining us. I wanted to give investors out there and any other readers who are interested in the Emmerson story but don't understand the potash market a bit of an understanding of what it actually looks like. It's not like other commodities where there is a market of last resort. It's all contract based, from my understanding. Could you start us off by just taking us through the drivers of potash and why people would be interested in investing in potash as a commodity?
Well, potash is fundamentally driven by this broad agricultural theme that we often talk about, which is driven by a growing global population and then shrinking amounts of arable land and the requirement to feed that growing population. And despite the best advances in science, there is no way to increase the yield and the amount of food that we grow without the use of fertilizers. So it's fundamental in supporting us as humankind on Earth. And as a result, you see a very, very consistent growing demand profile. It tends to be a lot less, how would you describe it, a lot less exciting than other commodities, but nice boring growth and headed one direction with a few blips in there. So consistent growth at about the global economic growth rate, call it 2 to 3 to 4%, and very consistent over time. In terms of the global supply dynamic, that's a far more interesting perspective to be taking. It's an interesting case study as a market, because what we see is incredibly high barriers to entry, which means there are very, very few global producers of potash. And as a result, the market behaves very much as you would see an oligopoly or even a monopoly behaving, where there's a lot of price signaling and price setting that is above the long-term marginal cost of production. And as a result, a lot of these producers are making supernormal profits, which is why the big mining companies were all interested and are all interested in trying to get into this very interesting portion of the global mining market.
Okay, and looking at the pricing at the moment, I think we've had a Belarusian potash company come out with a couple of offtake deals recently. The pricing they've indicated looks lower than some of the numbers that we're seeing elsewhere in the market, or have become accustomed to seeing, potentially lower than you have in your feasibility results as well. What should we be taking from that indication and those offtakes versus what should be expected in the mid to longer term?
I think it was pretty opportunistic by the Chinese to hold off negotiating those contracts and setting the price where they did right in the middle of the coronavirus pandemic. We had already seen a little bit of a tailing off of the potash price as a result of the Chinese trade wars with the US. There's a very big demand driver in the US farmers selling their products to China. And so as a result of not selling those products any longer through that trade war, there was a definite demand hit. But I think this definitely does not reflect what the long-term pricing requirement is in order to keep that amount of potash being produced. So what we see from a global cost structure perspective is the Canadian producers, despite having very low-cost projects to mine gate, are actually the marginal unit of supply in the global potash market. And the worst Canadian potash mines, owned primarily by Mosaic Corp, are very much underwater at today's prices on a cash basis.
Okay.
So they're losing money, which means if it keeps going the way it's going, there will be a supply response, and you see it almost as regular as clockwork. When the potash price goes down, the Canadians right-size their supply to meet the market, and the price goes back up. So we would expect to see a response from the Canadians as we have done and as we had seen prior to the coronavirus pandemic, and then we'll see a normalisation of the prices in the Brazilian market. I think it's important to note as well that while the price in the Chinese market is a price, there are a variety of different prices occurring around the world. So the
Okay.
Chinese price is typically the lowest price in the market. They have a lot of purchasing power, and so they negotiate the best deal. Typically, the highest price market globally is the Brazilian market, and it's
Okay.
generally somewhere between $50 to $80 a ton higher than the Chinese market. That's
Okay.
just as a result of its geographic location. All of the markets that we're targeting are in a geographical location which give us a margin improvement as a result of getting a slightly higher net back price to our mine. So,
Okay.
yeah, it's a relatively complicated market to understand, but there are a whole host of reasons why having a potash project in Morocco, where there are very few potash mines around, would be beneficial.
Okay. And looking at exactly what you're looking to produce from Khemisset and your plans for actually bringing that into production, based on what you're saying around the market being an oligopoly or it's almost a monopoly, how are you planning to actually break into this market?
Well, it's an oligopoly or monopoly from a supply perspective.
Okay.
On the buying side, the buyers of the product would absolutely love to have another source of potash. I think it's fair to say, while they wouldn't publicly say they hate the incumbent potash suppliers, there is certainly a degree of animosity that they have been taken advantage of for so long by the power of these incumbent potash producers. So the feedback we're getting from all of the sales and marketing conversations we're having is they would love to have another source of supply. In terms of scale, one of the benefits of having a relatively small project is we're going to be very, very small portion of the global market. So we're talking slightly over 1% of the global market in terms of production, which means that realistically the market won't even notice that we're coming into the market in terms of the impacts on a supply-demand perspective. The market's growing at a bit over 1 million tonnes a year as it is, and so we would expect all of our initial production to be eaten up by that excess demand on a year-by-year basis.
Okay. Hayden Locke, thanks for your time.